Good afternoon, everyone. I know we're going to start here in just a few seconds here, so I'll give everyone last couple minutes to get in, and then I will start here in about 30 seconds. All right, we're going to get started with this afternoon's webinar. So again, this is about decoding merchant services statements and credit card processing fees. So just briefly, my name is Tom Kelly. I've been with Wind River Financial now for 10 years. We're a family-owned business based in Madison, Wisconsin. Really like bringing customer education out to the market and doing events like these, just to give a little more insight into an industry that can sometimes be a little more confusing than you think it should be. So part of this, we're doing this in conjunction with Wisconsin independent businesses. They're a great association here in Wisconsin, really giving small independent businesses a voice within the state government. Again, like Wind River, they really believe in getting out information and providing kind of member benefits with access to different professionals that can help answer questions to help their business. So a great organization, and we're really happy to be putting this on in conjunction with WIB. Three goals of today's webinar, the biggest being how to read merchant services statements. As I mentioned, I've been doing this for 10 years now and have talked to thousands of merchants and looked at hundreds of statements. And I think one of the things I hear a lot of times is I don't even look at my statements because I don't understand what it says, or I look at it, but it's like a foreign language to me. So really want to bring you some education on how to read some of the more common credit card statements out there so you can take a better look at your program. That's important because a lot of times in our industry, there's a price to get you to sign up, and then like the cable bill, that cost goes up over time. So part of that, we want to help you read the statement, but also identify what fees are real and what fees are unnecessary. And then when you're looking at your program, are there ways that you can help lower some of those fees that you're paying? Always think it's helpful just to start out with just a high level on how our industry works. This slide shows there's really kind of two buckets where your fees come from. The first, the bucket on the left here, the card brand fees. Within the fees from Visa, MasterCard, Discover, and American Express, there are 400 different rates for the different types of credit cards that are out there. Those are called interchange rates. In most programs, that's going to make between 60 and 80% of what you're paying. And that's going to depend on where you use the card. Was the card present? Was the card not present? But those, again, are all fixed rates. There's no special wholesale rates or anything. All credit card processors pay the exact same amount in those card brand fees. The other bucket is the payment processor fees. So fees that would come from, if Wind River was your processor, would come from Wind River. Again, 20 to 40% of your program. And we'll get into kind of what those fees are made up of. Ultimately, at the end of the day, kind of what you pay or your fees divided by your sales, your net effective rate. That's really the one rate that matters at the end of the day when kind of looking at the overall health of the program. So now getting into reading credit card statements, what we're going to do here is going to look at about 6 of the more common processors that we see out there. The unique thing about the credit card processing industry is there's 5 or 6 big backends that a lot of processors will kind of sell under or use their backend to provide the service. Those big companies or those backends also have their own sales force. So although there's thousands of companies in our industry, I'd say a lot of the credit card statements are going to look the same depending on who your processor uses as their backend processor. So getting into it, we'll start with a Heartland Payment Systems statement. I'd say this is what Heartland statements have looked like since I've been doing it. They are now a part of Global Payments. As of now, their credit card statements haven't changed. I'd say of the statements out there, of the big guys, these are kind of a good place to start. What you'll see at the top here is a graph of the monthly sales on credit cards. And I'd say this is important when you're ever having someone take a look at your credit card processing program to make sure that they're not taking a very busy month. We sometimes see that in our industry where a sales rep will come in, take a very busy month and inflate or over promise on the credit card processing savings. So in this graph, you can see that this customer had pretty equal volume most months, kind of in that range. So wouldn't be a problem doing an analysis here, but just something to keep an eye on. But moving down, what Heartland does is they break out all of those interchange rates, our card brand fees. So here on this page, you can see Visa and then a little bit of MasterCard. Again, there'd be Discover and American Express further down, but they're going to show the number of transactions, the amount on that transaction, the rate associated with that card, the per item fee associated with that card, and ultimately what you paid per different card type. So this is true to interchange plus or cost plus pricing. And then further down the statement to really understand, so this is going back to that slide of how the industry works. That last page was that big bubble. This page is kind of the smaller bubble, if you will. So going down, if you're with Heartland, you would go down to the HPS processing fees. And to see what your markup is or what that small bubble is, Heartland breaks it out and by each card type. So American Express, Discover, MasterCard, Visa. So here with American Express, this would be 182 basis points or 1.82% on top of those card brand fees, plus 4 cents per transaction. You know, one thing you notice here is Discover, MasterCard, American Express, Discover, MasterCard, and Visa are all 1.38. This is something where American Express has the reputation that they are more expensive than other card brands. And that is true from an interchange or from a card brand fee standpoint. But sometimes what processors do is they kind of take that reputation and then charge additional fees because of that. So there's no need to charge an additional fee or a higher fee on the American Express, but that's just something that we do see out there. I'd say another thing, really for most businesses, new businesses, anything over a 75 basis point markup was what we would consider over market based off of kind of industry data. So as you can see here, this customer is priced over market. Another line item that we want to hire is this monthly versus daily discount costs. The way the industry works, again, is companies like Wind River or Heartland are paying Visa, MasterCard, Discover, and American Express on your behalf throughout the month. And then at the end of the month, they're going to charge you for all those interchange fees. There are some processors that are going to take those fees out daily. As you can imagine, that can create quite the headache when it comes to accounting. So what Heartland's doing is they're charging an additional 5 basis points here to really kind of really do things the way the rest of the industry does. So, you know, a little bit of an additional markup here. Say this would be 1.87 and 1.43 now when you add in this 5 basis points. Another thing we're starting to see from some processors are these non-EMV fees. As of today, there's no difference whether you use a chip card or don't use a chip card when swiping a card. But what Heartland's doing is anytime your volume of non-EMV, so not inserting a chip card, is over 10% for the month, they're going to charge us $25 a month. And then they're going to add an additional 1% markup to any volume that the card was not present. Now, when the card is not present, it is about 0.3 to 0.4% more, but that is within interchange rates. So this again is on top of the interchange rates. This is just an additional markup that they're charging. So if you're a business that is a card not present business, and you're with Heartland, you're probably going to see this fee because it's not only if the card is swiped or inserted, but just in general, if that card is not present, you're going to be assessed this fee. So this is something we've really seen pop up in the last year or so. So something, again, you might want to keep an eye on. And then the last piece here, the customer intelligence suite. I think this is something not unique to Heartland. We're seeing this on a lot of competitor statements where it's a tool where I think if you're a restaurant in San Francisco or New York, probably a good tool, but a lot of folks that we talk to aren't even aware that they have this, don't know how to log in. Once they log in, they don't see a ton of value from it. A lot of times what we see is this product was put in the fine print of a merchant statement and gave you a 30-day free trial. And then if you don't cancel, they start charging you month over month. So always kind of keep an eye out for additional fees. And if something is there 1 month that wasn't there the prior month, maybe a good reason to reach out to your processor to try to get an explanation of that. The next statement, TSYS. TSYS, again, also under the global payments umbrella now. TSYS is unique, or Heartland statements, they all look the same. TSYS, there's different statement ways they present their statements. This is probably the most common one that we see, so this is the one that I used. As you can see here, they're going to give you a breakdown of all the types of cards, your total sales, if there was any credits, and then the total number of sales. From there, they're going to get into your daily batch totals. But then where your fees come from, what TSYS does here is where Heartland broke it out as a separate line item. What TSYS is doing is this bottom number right here is the interchange rate or the card brand fee. This top number right here is going to be their markup. So they're kind of taking the 65 basis points along with the 80 basis points and 15 cents and giving you one grand total. So they're kind of bundling that together, but again, still showing you what the card brand fees are and what your rates are. So again, still an interchange plus or cost plus program from TSYS here. This next one is First Data. I'd say First Data is probably one of the most prevalent where they are having other folks sell under them. So Card Connect is one here locally in Wisconsin. Associated Bank uses First Data, which is now Fiserv. I believe Nicolay Bank. So there's a lot of you may have a statement that is going to look like this. One thing that we've talked about a little bit before, but kind of here's an example is, kind of buried into this fine print. You can see effective September 2023, your card point fee will go to $49.95. On the next page, we'll see that that's a $20 increase from what they're paying. A little bit further down, we'll say, if you use your merchant account, you're going to accept these terms. So it's really kind of on you to read these fine print and call your processor if there's something that you don't agree with or you have a question on. So, from there, they're going to get down into the daily batch summary. And then this is an interchange plus model, similar like the ones we've looked at before, where the markup is here is kind of be within, all the other card brand fees. Where it says service charge, that's going to kind of give you an idea that is a fee from First Data. You can see here 0.008. This is 80 basis points. So they're doing it kind of based off of I'll call it the number scale, where Heartland, for example, was 182 basis points, where it was 1.82. It's just a little bit of difference in how they are presenting that. But again, this is 80 basis points. So if they were to present this like Heartland, this would be 0.80 here. Again, there's another line item for debit cards. In some cases, we've seen these be different rates. Again, there should not be different rates because these are a markup above card brand fees. And then there is a transaction fee that is built in there as well. Now, one thing that was looking at this statement, something that we see is when you see non-qualified when describing a card type, so non-qualified consumer credit or EIRF, electronic interchange reimbursement fee. Sometimes it is enhanced or like I said, ERF. Those are things that are telling me as a merchant sales guy that this customer is not passing along the correct data, and they're paying about 0.3 to 0.4% more because of these card types. So that's just something that I noticed. Again, that's going to be harder for you to recognize, but just something to keep an eye on. If you're seeing a lot of IRF or non-qualified, that might be a reason to have a conversation around your program. And then something new that we're starting to see, again, this isn't just a First Data thing, but this is where we're seeing, had an example, this commercial card interchange savings adjustment. This is 75% of the $6.16 they saved. So again, $4, not a super impactful fee for this specific merchant. This is where First Data is going to pass along some data that maybe you forgot to pass along. They're going to automate that process. Again, we feel that's something that your processor should help you do. In this case, they're taking 75% of it. So if this number was, if they help this customer save $600, all of a sudden it becomes a $400 fee. So if you're starting to see that, really within the last year pop up on your statement, again, there's some things that you can do to avoid having your processor take some of those savings. First Data, again, there's so many First Data resellers out there. There's a lot of different ways to present pricing. So as the last statement was an interchange plus or cost plus statement, this is a bundled statement. So I know it's a little confusing because it says non-qualified sales discount, and there's the non-qualified commercial card on the previous page. But when you see non-qualified, mid-qualified, qualified, what that's telling you is your processor is taking those hundreds of card brand fees and putting them into 3 buckets, and they're going to decide which card goes into which bucket. There's going to be a low cost qualified bucket, which is really probably going to be just your debit cards, then a mid qualified and non-qualified. So it's kind of like going into a grocery store. Everything in the grocery store is one of 3 prices. You're really going to overpay for some things. As you can see here, this customer is paying almost 5% for anything that First Data is deeming non-qualified. So again, way over market. You can see the mid-qualified rate was 4.09. Again, probably an over market rate. So if you're in a bundled pricing program, I'd say 99 out of 100 times you're going to be overpaying. That's really in the benefit of the credit card processor. So the cost plus or interchange plus programs that we've looked at are going to be more cost effective for you in the long run. Clearant is another processor. So this is a statement. Again, there's a lot of folks that sell under the Clearant umbrella as well. The markup is shown here where they're going to put their assessment or their markup above card brand fees of 64 basis points or 0.64%. They're also going to show their per transaction cost on that same line item. So where some folks break that out as the assessment here and the per item here, they're including it in one line item. Express merchant funding fee. Typically, merchant processors will fund your account in 2 business days. Some processors will fund that quicker, but in most, if not all cases, there's going to be an additional fee here, which you can see is an additional 5 basis points for this merchant to get their funds a little bit quicker. Another thing I wanted to point out is the monthly minimum discount. You can see here it says $25, and then here it says $17.64. What this is telling me is each month, this customer is going to have to spend $25 in markup, or they're going to be charged kind of that difference. So as you can see here, they're being charged $17.64. So they've only paid $7.36 in markup. So what this processor is doing is saying, nope, you're going to pay us at least $25 a month. We're going to charge you a fee for the difference. So I'd say if you're a business that's doing under $5,000 a month in credit card processing, that's really where the monthly minimums typically are going to be assessed. So again, that's where a lot of times in these programs we see a low rate, but it's set at a point where you're never going to hit that monthly minimum discount number. And so that low rate is really kind of out the window, and it's basically just what this monthly minimum is going to be. And then something else I want to touch on, the PCI non-compliance fee. Again, this is where there's some things you need to do: the annual self-assessment questionnaire, network vulnerability scans. We see a ton of these when looking at statements. There's not a lot of education in our industry around PCI compliance. obviously there's the financial aspect, but I think the bigger piece is the security and protection of your business. So if you're seeing a non-compliance fee, I think that's a red flag to have a conversation around improving the security of the credit card processing program. WorldPay, this is another one that is very prevalent, as their name suggests, obviously a worldwide processor. Again, one that has multiple different ways of showing their fees. I'd say this is probably the most prevalent of them, where they're showing 86 basis points, so 0.86% for each of the different card types. And then they're going to break out their per item separately here, where you can actually see they've got a transaction fee and then an authorization fee. So that's again where this would be over 40 cents per transaction, which in most cases it should be in the the low teens, 10 to 15 cents per transaction. So if you're a small average ticket merchant, a merchant where you're doing under a $50 average transaction size, a lot of times the per item fee is going to impact your overall cost more than your basis points. But again, just trying to be as competitive as possible in all areas and making sure that these numbers aren't changing over time. And then also, like the previous statement, they also mentioned kind of this monthly minimum charge as well. So just kind of showing you that it's a lot of these fees where we're showing you examples on certain statements, a lot of them apply really across the industry, especially with some of these large national processors. The last one I want to touch on is Elevon. Again, kind of reading the fine print is important. As you can see here, they're talking about a billing change or additional fees. But in this case, you need to go online to see what those fees are. So I think a lot of times, the more difficult it is to see where those changes are coming from, the easier it's going to be for that processor to keep raising those fees. So if your statement looks like this, again, they'll have kind of a summary of your sales, a recap of the volume, the deposits, kind of those daily batch totals. Elevon then is typically going to then break out what your fees are. So the per item fee and the basis point markup. Now what Elevon does is typically then they have another section over here under authorization fees where they have an additional per transaction or authorization fee. So really this 10 cents is more like 20. So again, just something to kind of keep an eye on. So identifying real versus unnecessary fees. We talked about the non-EMV fee. Again, that is a processor charge. That is something that's been new. That's really we've seen within the last year, especially if you're a card not present merchant, where that card isn't going to be present. You can't insert it. You can't swipe it. That's where you're really going to be hit the hardest. If your processor is charging you that non-EMV fee, it may be time to look for a new processor that's not going to charge you that fee. A risk fee, that's something that we've seen, again, kind of pop up in the last year, where processors are charging an additional fee above the markup to really help offset their portfolio risk. So a lot of times we're talking to businesses that really aren't what our industry would deem risky merchants. So they're not doing a ton of advanced sales or don't have a lot of chargeback risk, but they're paying a fee that's really helping offset their processor's risk within their portfolio. So similar to the non-EMV fee, if you're a merchant that's not a risky merchant and you're being assessed that, it may be time to look for a different processor. The customer intelligence suite, again, we're seeing this about $55 a month. Look at your statement. If you see it on there, again, it was probably in the fine print. And if you're not using it, again, that's something that either, you should call your processor and have them stop billing you for that, or again, look for a different processor. The daily discount, again, this is a little bit more from an accounting standpoint. If fees are getting taken out daily, that's where it can become a nightmare for your accountant. So some processors are getting charged fees for that, but that's really how typically the industry does it. So in our eyes, there shouldn't be a fee for them to do it the way everyone else is doing it. So the daily risk monthly discount kind of falls in that same bucket as well. And the PCI non-compliance fees. Again, there's the financial side of this, but I think really the bigger picture is you need to do it for the business security standpoint. If you do have a breach, if you lose credit card information, you're going to be a lot better off if you were compliant than if you weren't. The card brands are going to take it a lot easier when it comes to financial penalties. So again, something that if you're non-compliant, if you're not getting help from your current processors, or if they're not proactively reaching out, again, maybe a reason to look at making a change. And fees bundled into interchange. This is something, it didn't show an example. This is going to be kind of, if this is credit card statements 101, this is probably going to be credit card statements 401. It's a little bit more advanced. But what some processors will do is instead of showing the card brand fee for what it truly is, they're going to bundle in 30 or 40 basis points so they can show a low markup, in others. So they can say, hey, we're only marking you up 10 basis points. Well, you're bundling 40 with the credit card fees. So truly the markup is 50 basis points. But unless you know where to go to see some of those fees, that's going to be very difficult. And then lastly, ways to lower credit card processing fees. Again, anytime you can take a card in person, you're going to want to do that. It's about 0.3 to 0.4% less in those interchange rates. And like we've seen with some of these other processors, adding some additional fees when the card is not present. That is a way you can help lower those fees. When the card is not present, there are some things that you need to do. Really, Visa and MasterCard Discover, they see a card present transaction as the least risky transaction. When it's not present, you need to pass along your billing street number, your billing zip code, and if it's a business card, a PO number, and then also a CVV or kind of that security code on the back. If your terminal's not prompting you for that, we do run into that sometimes where the software is not prompting you for that. You're going to be downgrading on all those transactions, paying 0.3 to 0.4% more. So that's something that you're going to want to do. And then in some cases on B2B, business to business, business to government transactions, certain business cards do qualify for incentive rates, which are called level 3 data, invoice number, product code, quantity, item description, commodity code, things like that. That's a little bit deeper of a conversation. But there's ways that you can lower those interchange rates by, in some cases, over 1% by passing that level 3 data. Again, that's something that your processor is going to need to work with you on. At Wind River, we can help automate that process for those merchants that qualify for those types of cards. Something that we hear a lot in the market right now, surcharging and cash discounting. Surcharging is where you pass the credit card fee on to your customers. A cash discount is where you build that fee into your overall cost and then offer a discount if the customer pays with cash as opposed to credit cards. Visa has made some recent changes to the surcharging rules, and I think there's not a lot of education out in the marketplace. The max you can now surcharge is 3%. And then something that's always been there, but we're still seeing a lot of folks do it, is you're not able to surcharge debit cards. So when it comes to surcharging, I think every business is going to be unique. I think there's kind of a list of things that you can kind of talk through with your processor to figure out, am I doing it correctly, or is this right for my business? And again, if you have questions on that, we're happy to have a deeper conversation with you. And then becoming PCI compliant, as we talked about, I think in our industry, and I think it comes down to a lot of education and customer service where folks aren't getting notified they need to redo that to recertify. Only about 33% of businesses are PCI compliant today. So again, there's the fee, but then there's also the risk to your business. So with that, I know we went through a lot. I probably could have spent 3 days walking through all the different types of statements. I wanted to try to keep it at a high level for you today. But with that, I guess any questions? I think I see one right now as far as what is a good credit card processing rate. It's a good question, and I think really the best answer anyone can give you is it depends. It's really the biggest piece is gonna depend on is what are your card brand fees? Again, that's gonna make up a bulk of what you're paying. The markup piece, that's really should be, as the volume grows, your markup should go down. So a a business processing $1 million should be paying less in credit card fees in markup than a startup business. So as your business grows, understanding is that rate going up or is it going down? It should be going down. I'd say real high level, probably between 2.5% and 3.5% is kind of that range. But again, we're happy to kind of dial that number in a little bit based off of your unique situation. Another question: how often should I reevaluate what I'm paying for processing? I think just with what we're seeing in the market, typically a lot of the big processors, especially, are going to change their pricing. Really, if not every 6 months, every year. So if you haven't looked at it in over a year, it might be worth having someone take a look at it. Again, I wanted this to be educational today. I didn't want it to be a Wind River sales pitch, but I think just to mention, I think Wind River is unique in the industry that we offer a competitive rate, but more importantly, we keep that competitive rate. Again, when we can offer cost savings to folks, a lot of times it's not because that's where they signed up, that's where their pricing has gone. So just also part of it as you're looking to make a change, just understanding what is the pricing strategy of that processor, and if they're promising savings, how long will those savings be there? Another question about cash discount. Is it legal in Wisconsin? Cash discounting is legal in Wisconsin. Surcharging is also legal in Wisconsin. Cash discounting gets you out of some of the, I'll call it, hoops that you need to jump through with surcharging. I know gas stations have kind of been doing it for years, where it's, here's your price if you pay with cash. This is your new price. So yes, you can offer cash discounting here in Wisconsin. Another question here on surcharging. If we're assessing 3% surcharge, must it be on every amount, or can we make decisions to only surcharge when the sale is over a certain amount? Another really good question. Visa and MasterCard, their rules are, if you're going to surcharge one, you've got to surcharge all. So the only exception there is if it is a debit card, then you're not allowed to surcharge it. But that's kind of where, you can't pick the customers or pick the amount. If you surcharge one, you need to surcharge all. And with that, if there are no more questions here, I've got my contact information here. Again, we'll send out a recording of this. I'll send out my contact information. Again, if you look at your statements and have questions and want to still have trouble reading it, we're happy to take a look and really kind of walk you through what we see, and if things are competitive, if they are competitive, what to keep an eye on in the future to make sure that those things don't change. I do see one more question popped up here. How do you know if it's a debit card? I'd say a couple things. One, the debit card should say debit on the bottom of the credit card. I know at Wind River, anytime we sell a credit card terminal, so that countertop device, within that software, it can tell by the BIN number or the first 6 numbers of that credit card number that it is a debit card, and it won't assess that surcharge. Now, with some point of sales and some softwares, that functionality might not be there. So it's really upon you or your staff to identify the debit card based off of it saying debit on the bottom of the card. So I know that's not a great system, but just really kind of part of the rules. The reason you're not allowed to surcharge debit cards, they have very low interchange rates or very low fees. So that was kind of one of, I'll call it one of the changes that they made when surcharging came to be. And like I said, with that, if you have questions, again, please don't hesitate to give me a call, shoot me an email. If you'd like me to walk through anything unique to your statement or your business, I'm happy to do that in kind of a low pressure way. I won't be the guy that calls you 15 times a day. But again, happy to be a local resource for you when it comes to credit card processing. So with that, I'll let you guys get back to your day. I appreciate you spending some time with us today. And please let us know how we can help. Take care.